Overnight, global markets took their cue from a provisional 2-week ceasefire between the United States and Iran, with Iran indicating it will allow some form of passage through the Strait of Hormuz under conditions. Oil prices fell sharply on the announcement and equities lifted, but crude remains well above pre-conflict levels and the ceasefire is already under strain. Israel carried out a large wave of airstrikes across Lebanon within hours of the truce, and Washington has argued Lebanon is outside the Iran arrangement. The net effect is reduced immediate panic in energy markets, but elevated risk remains, particularly with reports of continued attacks on regional energy infrastructure and uncertainty about how shipping will be managed through Hormuz. The global economy story this morning is therefore a mix of relief and fragility. Lower oil on the headline, but ongoing geopolitical risk premia in energy, insurance and freight. That matters for inflation expectations and central bank settings, and it keeps the global growth outlook sensitive to any renewed disruption in Middle East supply routes. On the technological revolution front, Europe continues to move toward tighter platform regulation, with Greece set to ban social media for under 15s from next year, following similar moves elsewhere. It's another signal that governments are shifting from voluntary safeguards to hard rules around online harms, age verification and platform accountability, with implications for global tech firms and digital policy debates. Space and advanced industry also feature, reporting highlights that mining on the moon is moving closer in technical terms, but faces major physical, environmental, ethical and legal hurdles. Separate analysis warns Australia risks falling behind in lunar and space-adjacent science as domestic research funding pressures bite, even as global competition accelerates. Turning to Australia, the dominant economic and policy development is fuel security and price pressure. The Prime Minister is traveling to Singapore on a hastily arranged mission aimed at shoring up crucial fuel supplies, as warnings persist that the global energy crisis could worsen quickly if the ceasefire falters. While oil has slid on the truce, analysts caution Australian motorists should not expect immediate relief. Retail fuel prices are likely to stay high for weeks, potentially longer, due to lag effects in refining, shipping and existing inventory bought at higher prices. Politically, Canberra is also calibrating its language around the ceasefire and U.S. rhetoric, with neither side of Australian politics rushing to celebrate the truce too enthusiastically, reflecting concern about volatility in Washington's messaging and the risk of renewed escalation. For the Australian economy, the immediate takeaway is that the ceasefire reduces near-term recession risk tied to an oil shock, but it does not remove it. Energy costs, supply security and confidence remain the swing factors, and they feed directly into household budgets and business input prices. In the public sector and institution space, documents aired in reporting show the University of Technology Sydney paid close to $1.5 million for a leadership coach before planning job and course cuts to save money, a development likely to intensify scrutiny of governance, spending priorities, and accountability across publicly funded institutions. Finally, in local and legal news, Ben Roberts-Smith has remained in custody following a court mention in Sydney after being charged with 5 counts of the war crime of murder, a significant and ongoing national legal matter. On the Australian share market, the key driver today is the global risk-on move tied to lower oil and higher global equities, but local sentiment will remain highly sensitive to any sign the ceasefire is breaking down or that shipping through Hormuz is again constrained.